Hi, Mark Gordon with GoldenTicker.com on Friday, March the 2nd, 2012 with a gold, silver, and spider report. I'm looking here at the GLD. This is, of course, the exchange-traded fund for gold, widely followed, a definite barometer for gold prices. On Wednesday, had a bad day, down 5.7% very quickly on Fed Chairman Ben Bernanke's not including quantitative easing into his speech, which is basically money printing. He was alluding that unemployment figures are looking strong, so there may not be a need for more easing. I don't believe that, and I don't think the gold market does either. This was probably a lot of central bank intervention clobbering gold, which triggered a bunch of sell algorithms, and the party began. We did hold here at a key technical level. This green dotted line is the 100-day moving average, and we held that, and we have been trading above it for the last couple of days here. You can see the blue line, the important 50-day moving average. We are above that as well, and that is creeping up, and will probably cross over the 100-day moving average next week, which will be a very bullish sign for gold, and will probably bring more traders into the market to the long side, providing we don't get a further drawdown in gold. You can see the falling volume after the big down day here, which is also a good sign. So not a lot of selling following through on this big plunge. Now, of course, anything can happen. We do have a lot of support in this area here. If you notice this black dotted line, this is the 200-day moving average, and this will provide more support. So in this zone, in the 162.50 to 165 zone, we have a lot of support here. A lot of traders are bullish on gold. We did have a very nice run off of 148 all the way to 174, topping out there. One thing that this fall did was sort of dash our hopes that this breakout here from this handle formation of the larger cup formation would follow through to the upside. In the short term, we have broken that uptrend, and so we're waiting for another reset. So best case scenario, let's hope that we build something, a little foundation down in this zone here around these key moving averages, and shake out this weakness and start to run higher. Certainly getting above 174 will be a very bullish sign for the GLD. Now, looking at a weekly chart of the GLD, we were down 3.42% on the GLD for the week. And you can see here that we did have this big broad ranging day here, and we are holding above these key moving averages. The black line, of course, is the 40-week, the blue line is the 10-week, and the green dotted line is the 20-week. So good support down here. You can see it on the chart. Came down, touched the 10-week moving average right where it's getting close to the 20-week moving average, and bounced right back up. We did have a pickup in volume on a down week, so that is distribution, but we have not had a lot of distribution in this base here. Now, this is technically still a cup formation. We did have a cup with a handle formation, but taking out this low point of the cup sort of dashed our hopes on that following through. So we still are in a cup formation technically. So getting above 175.46 would be a great sign. Getting above this week's high would also be a great sign too. Now, I want to show you something. This here is the MACD, the moving average convergence divergence gauge. Now, this is looked at by a lot of traders. We had a cross. The black line has crossed the blue line, and it did that earlier in February, and we are still, the black line is still above the blue line. In other words, the faster moving average is above the slower moving average. This is a nice sign, especially when it crosses on the lows of the blue line. So you see we have this blue line here. It came down, took out the previous lows of this blue line, and is now headed back up, and we got a crossover. This is a great predictor that gold will be in a an uptrend here for the next several months. Nothing's ever for certain in the stock market, of course, but this is a very, very good sign for the GLD. Moving on to silver now. This is the SLV, and you can see on Wednesday silver got spooked as well, down over $3 here. About over 10% drop in one day. So big shakeout in silver here on massive, tremendous volume here. But still holding here at the red line, the 21-day moving average. Pretty amazing. And certainly well above the 50-day moving average, this blue line, and well above the 100-day moving average, this green dotted line. So, and this uptrend here is still in place. I would say it's going to be still in place until we take out this low here at around 32. But uptrend continues, a bit of a shakeout, and staying above the lows made on Wednesday and getting support here at this red line, the 21-day moving average. It shows you that traders are coming in to support silver prices in this area. You can see volume has dropped off after the big fall on big volume, which is another good sign. You like to see volume quiet down after a big drop and still hold above the lows of that drop. So silver still remains in this uptrend, even though it's been tossed around a little bit. So I'd say that to expect more volatility in the future. The metals are very, very volatile, and there is a lot of manipulation in these markets, in my opinion, by the big traders, the big banks, the big central banks, the big hedge funds, etc. So hold on to your hats. This is trading this stuff is not for the weak. And coming in here to a weekly chart of the SLV, you can see this cup formation still intact. You can also make a case for a double bottom formation here, and once we got past this 34.44 point that we had confirmed this, that confirmation is still in place here. So silver looking strong. You can see here that the 10-week is crossing over the 20-week. Nice bullish sign. Could bring more long traders into silver. You can see the definite support here at the 4-week moving average, this red line. And you can also see support closing here on this black line, the 40-week moving average. One thing I don't like about this chart is the fact that the slower moving averages are below this longer 40-week moving average. I'd like to see the reverse of this, where your shorter term moving averages are stacked above the longer term moving averages. That's a more bullish formation, but nonetheless, silver still building the right side of a constructive cup-shaped base with a double bottom. So I like this chart for that respect. I'm still liking the shape of this cup, even though we had a nasty day on Wednesday. And moving on now to stocks, this is the SPY, the S&P 500 exchange traded fund. And stocks have been in a nice run ever since 2012 began, and maybe even a little bit before that. And you can see this beautiful uptrend here, never breaching this red line, which is the 21-day moving average. This is a real powerful rally here, folks. This gray line here is the 10-day moving average, and it has been predominantly riding above that moving average ever since this rally began. Technically, it began when it broke out of this handle down here at the end of December, and then reconfirmed here when it broke above this overhead trend line here at the beginning of 2012. So coming up to the upper Bollinger Band, this gray line here, which is designed to keep prices within these two bands 95% of the time. So coming up, tagging the band, and then coming back, pulling down, getting support here at the 10-day moving average, undercutting it a couple times here, which is natural, and certainly getting support at the 21-day. So nice, solid uptrend on this daily chart here. Now, we don't know how long these rallies will last. They can last for quite a while. So this is the time to be in stocks. 3 out of 4 stocks follow the general market, and the general market is running higher. That's about all you need to know. Moving on now to a weekly chart of the SPY, we can see week after week, higher high every week, higher high. Beautiful run here, staying above this red line, certainly closing above it every week, which is the 4-week moving average. above this blue line, 10-week moving average, solidly above this line. All the moving averages stacked up in the right order above each other. Broke out of this flag pattern here around the beginning of the year and has been running ever since. So stocks looking strong. So gold, silver, and stocks are looking strong. Certainly gold and silver were hit hard this last week on Wednesday. I believe that is just some technical selling here. It did not break the uptrend. So everything looking green. Let's see what happens next week, but we're moving higher.